They're serving the rich and they're enslaving the poor. See, because when you keep interest rates at zero, as they did for 7 years, who are the savers? Well, they're the middle class, maybe a slightly upper class, but basically people are taught to save. Well, those interest credits now go to corporate America and to the government. The downside of this will be horrendous, but they're meanwhile keeping it going.
This important update is brought to you in part by our friends at Rugged Reserves. Their Patriot Flashlight is a must-have. Just think about it. When you pack your bug-out bag, you want everything from a glass-breaking hammer to a cell phone charger to a flashlight to a wire cutter and a compass. Well, you can get all of that and more with the Patriot Flashlight. Light up the darkness with 500 lumens that can be seen miles away. And there's an emergency strobe with 4 unique lighting modes. And now the Patriot Flashlight even has an emergency siren. And you know what the best part is? It's solar powered. So this bad boy will always have power when you need it most. It really does make the perfect gift. Get one for your bug-out bag, for your car, for your home. Just visit patriotflashlight.com. I'll leave the link below this video. And while supplies last, use promo code SGT25 to save 25% off your purchase. That's patriotflashlight.com. The link is below this video. Hey friends, thank you so very much for tuning in. It's my absolute pleasure to have you back, and it's my absolute pleasure to have on a brand new guest, somebody that some of you have been asking for repeatedly. It's Victor Sperandeo, known as Trader Vic. Some of y'all have been saying, Sean, please get on Trader Vic. He's a Wall Street legend. He began his career in 1966. He started trading in 1968, and he's the mind behind many books, including Methods of a Wall Street Master, Principles of Professional Speculation, and Trader Vic on Commodities. It's my pleasure to welcome him now. Trader Vic, thanks for joining us.
It's a pleasure. Thank you, Sean.
Thank you so much for coming on. I really appreciate it. Look, big fan of your work. I've been watching some of the interviews you've been doing, not the least of which is this one posted in January. It appeared on a YouTube channel called Real Vision, and I want to talk to you about the state of the market today. I also want to talk to you about your thoughts on Bitcoin, on gold and silver, and on the Fed. But specifically, in that interview, and I'm not sure when you recorded it, I think it was posted on that channel in January or so, you made the argument that we're in a bear market, and you were able to quantify that. Do you still believe that we're in a bear market, especially now that we're seeing signs that QE may continue in perpetuity?
No, I don't think we're in a bear market per se, and I can explain the transition and explain the reasons why, and I think it's important. Back in October, Powell was pounding the table that this was the greatest economy he's ever seen. He made a few speeches, and he was talking about raising rates 3 times. Goldman was pounding the table that they should raise rates more than 3 times. This is in early October. Anyway, I use fundamental technical analysis and monetary theory, and they all have to blend for me to make a call. And they usually do. They usually come into play, and if one isn't or 2 isn't out of 3, let's call it, then usually it's I'm not going to say anything and put myself on the line, and also be involved in the markets because I still trade and I still put myself into the mix here, and I'm still active. So in any respect, in October, the technicals first hit my eye, and the 2 best long-term technical indicators I know are Dow theory and the use of the 200-day moving average under specific conditions. And that is when the 200-day, and this is physical days, moving average is tilted downwards, not when it's tilted upwards or sloping upwards, and the market closes below that moving average. Now, this was a study done in the 60s by Indicator Digest, and they went back to 1900 and they tested 10 indicators, and the 2 best were those 2, Dow theory and the 200-day moving average, and I've carried them forward since, and they have been phenomenal. They make about 18% a year compounded if you follow these rules. Anyway, so they both went below the moving average. Dow theory gave a sell signal in the last quarter. So I was a bear from a technical level. Now, fundamentally, you have the Europe slowing, and you had Germany on the cusp of being in a recession. I believe Italy was in a recession, still is. You have a number of, France is going into recession. So this is all in the last quarter. So the whole world is slowing. And basically that is going to hit the U.S. as well. And you basically have what I consider, since it is a global economy, and I watch, by the way, global money supply, that's what really is the best correlation to the S&P, is you just overlay the S&P 500 to global money supply, and you will find an incredible correlation. So money supply was slowing all over the world. And by the way, parenthetically, understand China put $1 trillion, just a tad under, in January. They put $1 trillion into the markets. So that changed things. So now we move forward. Monetary theory is also going to raise rates 3 times in this year. And that's what Powell said. Goldman was saying they should do more. And then my interview, which you referred to with Real Vision, was done on January 3rd. It came out on the 11th. And I basically said the Fed has made a huge mistake.
Right.
And along me and Stanley Druckenmiller, who's in the Wall Street Journal, and warned the Fed, along, of course, Trump saying you shouldn't raise rates. But it was a monstrous mistake. So on January 4th, Powell, along with Ben Bernanke and Janet Yellen on a stage at some conference, reversed 180 degrees their policy.
Right.
So the rally from the low came on the 26th of December, and that was a buy program by the PPT. It was even announced because Mnuchin, the Secretary of Treasury, said he had a conference call with all the relevant people and banks, and that was a big buy program. And that's a telltale signal. That happened also on the actual low of the bull market that started in March 9th of 2009. So you'll always see this huge move up from the bottom, and that's what they call the plunge protection team coming in with unlimited money buying the market up to get the ball going. So
right.
Anyway, I officially changed my opinion technically at that point, because I basically knew you're going to get a rally. So if I were talking to you, I'd say, no, you got to cover shorts. The lows have been made for a while. You're going to get a bear market rally, which I anticipated. However, as GDP came out at 3.25, and by the way, let me parenthetically say that, I don't know if your listeners watch the Atlanta Fed. They project GDP growth as information comes out. So they project it many times depending on the news that's coming out. They started on March the 1st, and they projected GDP growth to be 0.3% as of March the 1st for the first quarter, ends March 31st. They moved it up. They changed it 17 times, which is normal. In other words, every time news comes out, they update it. And as they moved it up, it went up in a straight line to 2.7 on the 25th of April, and then it came out at 3.25. Now, if you have a 3.25 GDP growth, you're not in a recession. In other words, the fundamentals now are highly different from what I expected. China added to this mix. As I said, they put a huge amount of money in the first month of the year. And basically all the money supply statistics started to change. So money supply started to grow, and therefore the central banks changed their minds. And today, because of central planning, central banks rule the roost. So if they're doing QE and they're lowering rates, if they want the market up, the market's going up.
Right.
It's just you can't fight the Fed when they have unlimited printing presses, and now 23 central banks all go in the same direction. You're going to get that money coming into the system. It all goes into stocks.
Right.
Not all, but a great deal of it. And therefore, you can end that thought. So they made a mistake. They corrected the mistake. And now you're back to square one. Now, this quarter, by the way, is going to be a 1%, 1.5% quarter. But that doesn't matter. You're not in a recession. And, you've changed things in every dimension. The The technicals all reversed, and again now the moving averages are tilting up again, they're sloping up, and the prices are above them almost across the board.
Let me ask you this, Vic. I was watching a video from my friend Mike Maloney, who wrote the book, A Guide to Investing in Gold and Silver. I want to ask you about gold and silver. I want to ask you about Bitcoin too, because that thing's on the move. And there's very fundamental reasons I want to ask you about those assets. But let me ask you this first. Is it now with hindsight that we can see, Maloney put up a chart showing QE and the printing of money, QE correlating extremely well, the charts correlating with each other extremely well, the rise in the Dow with QE.
All of the QE, I've shown charts many, many times of how the quantitative easing almost exactly matches the rise in the value of the stock market.
Is it now with hindsight that we can just say, well, as long as there's going to be QE, the Dow will keep going up? Because this market has chewed up hedge funds. It's chewed up many smart people who have gotten out of the game saying this market makes no sense. We're closing up shop. I mean, this is a very different market than the one you began trading in 1968, is it not?
Correct. It majorly changed when Obama was elected. When QE was developed after the 2008 recession. And so, yes, by the way, money supply has always correlated with the markets, always. So, however, you've added a dynamic dimension, an exponential dimension. The QE used to be called coupon passes. In my early days, and by the way, in the 70s, nobody even knew what the Fed funds rate was. Seriously, I called 10 people, a little more than 10 people. And what's the Fed funds rate? This is early 70s when I was trading and I was technical at that time.
That's amusing.
And not a single guy could tell me what the Fed funds rate was. They didn't care. So as the game became more known, people became more knowledgeable of what makes the world go round. And certainly that is money and the Fed. So now you've added dimension with QE, and what QE is are coupon passes, meaning buying long-term coupon bonds, and that is permanent money as opposed to if the Fed used to buy T-bills. See, that was short-term because T-bills lapse in 3 months, generally 90-day bills. So the money comes out of the system. So there was an automatic, you put it in, but it comes out automatically. But when you buy bonds, the money stays in until you sell those bonds. So when you're doing QE, it's just a different name. It was a permanent add to the system of money. And certainly QE will stimulate asset purchases of all kinds, not only stocks, but art and diamonds and you name it, Ferraris and you name it, because all those assets are going to go up because you're adding money to the system, and people get that money and they either borrow the money or they get it by their possession because they own stocks and they're making money, and then they sell some of those stocks or borrow against them and buy other assets for diversification.
Right. So would you agree with me that we are seeing hyperinflation in a sense in asset prices? I mean, Amazon stock $5 after the internet bubble popped. Now it's close to 2,000. I haven't looked lately. But is that where the inflation is? It's in the stock market, and as long as they're going to continue QE, we'll continue to see it.
Correct, and you've hit upon a very important point. Now, using the term hyperinflation in assets is not often stated because, of course, hyperinflation pertains to general prices. But let me expound on this just 1 minute. The key to why you don't see inflation in CPI and prices that you generally go to the store and buy things with is because the Fed, and you'll notice that took place at the same time. This was in, by memory, October of 2010, early 2011. They started to pay interest on reserves. So what they basically did, and I congratulate the bureaucrat that thought of this, but what they did was say, okay, banks, we're going to be buying a lot of assets. Generally, the banks will loan that money out. And if you recall Money in Banking 101, $1 that you loan out can become $10.
Right.
Because it's redeposited and loaned out, and a portion of it is held in reserves. So it goes to 10 to 1 in round numbers, assuming a 10% reserve requirement.
Right.
So what happened is that they are now paying the banks to not loan the money out. So what they've done here is they've discovered a way to basically make assets go up without inflation by pouring money into the system, because they're pouring it in only to the assets that basically people buy for investment. In other words, they're serving the rich and they're enslaving the poor. See, because when you keep interest rates at zero, as they did for 7 years, who are the savers? Well, they're the middle class people. They're, maybe a slightly upper class, but basically people are taught to save. Well, those interest credits now go to corporate America and to the government.
Right.
So you're basically taking that money away and serving it to the people who own equities primarily, and they're getting the benefits. So therefore, that's why you have now this huge income disparity, because it's all going to the people who own equities.
That's right. You absolutely nailed it. I've been waiting for somebody to phrase it the way you phrased it. I wish I had come up with that. That is exactly what's going on. They're serving the rich, and I'm not sure if you said enslaving the poor, but that's essentially what they're doing, because most of us don't have a heck of a lot of Amazon stock in our portfolios. We don't have a heck of a lot of Apple stock in our portfolios. We can talk about the FANGs and what you think the FANGs are telling us about this market, but I think more importantly, what I'd like to do is ask you about gold and silver and Bitcoin. And the reason I'm back on this Bitcoin story is because we are watching history unfold. Whether you like Bitcoin or hate it, whether you own it or don't, Bitcoin is telling us a very important story. And it's got, I think, some very important people concerned. Because while the Wall Street banks can control the prices of gold and silver via the paper market and paper, silver, and gold, and they can control what silver is telling us with the price at 15, nobody's afraid, and gold at 1,300, nobody's afraid. What if gold was $10,000 an ounce and silver was $500 or $600 an ounce? What would that tell us about the dollar? And I think that's why the Bitcoin story is important. So before we talk about Bitcoin, your thoughts on gold and silver. They cap it because then nobody has to worry about the dollar, right? The dollar's still as strong as ever.
Well, for full disclosure, I've been a gold and silver investor since the early 90s, and I've only added to my position during opportune times. And so, I own gold in the 300s somewhere. So I am a big bull. I'm talking my book a bit, but I'm an investor. And I believe that the precious metals, along with platinum, and I don't own any platinum, but these are the best investments. Now, they don't pay a dividend, which is part of a definition of investments, but they are the best long-term undervalued assets in the world, is gold and silver and platinum. Palladium has already made its move, so I wouldn't own that. But the reason that, again, gold and silver have not moved up is because, going back to what I just said, the Fed has orchestrated a way to keep inflation low, and basically gold and silver commodities in general respond to three things. And that is rising interest rates, which reflects inflation, GDP growth, which reflects a part of inflation, and inflation itself. CPI, there are many dimensions of measuring inflation. The Fed uses the PCE, the personal consumption expenditures. The BEA uses the GDP deflator. The Social Security, they use chain weighted. I mean, they have a measure for anything they want to screw you with. So, but the point is, if you use the CPI, which I do, which is an official number since 1913, you had the lowest 10-year rolling inflation ending 2017 since 1955. So if you started in 55, 10 years later, you compounded at 1.55%. In 2017, you compounded at 1.6 3%. Very low, extremely low. Hadn't been that low since 55. So the point is, inflation has been kept low for a number of reasons. One I discussed. The other one, of course, is what's called free trade, which is really closing our manufacturers in the United States and moving them to low cost labor countries like China and Vietnam, as well as keeping interest rates low to the people who can borrow, but high to the people who can't borrow. Right now, the average credit card debt is like 17%. I mean, you just had Bernie Sanders and Ocasio-Cortez come out and say they want to cap it at 15. But the point is...
Well, yeah, side note on that, though, man, and I'll tell you this, those usurious interest rates are offensive. Because, look, for people with good credit like me, I can go get a car loan tomorrow at 2%. Now, I've seen these shark loans for, oh, come on in and no credit, it's no problem, we'll get you a loan, and you read the fine print, it's 19.99% on a car loan. I think these usurious interest rates, and I'm no fan of AOC or Bernie, believe me, they are the enemy of freedom, in my opinion. But I do have a problem with these usurious rates, 29% interest rates on. I mean, again, who's being victimized? The poor people, the little guy.
The poor, the people
it's disgusting.
That use their credit cards and don't realize, part of it, they don't realize they're paying what they're paying because they pay you the minimum each month. Okay. Aside from that, I'm only suggesting that, and I agree with you. Okay, we don't disagree at all. But the key is that interest rate inflation has been kept low, and that's why gold and silver has not gone up, because you've been in a recovery. But now it'll tie the record in June next month, in 2 weeks. It'll be 120 months, which is the longest since 1854 when the NBER started to measure these things, and in July, it'll break the record. It'll be 121 months. It'll be the longest recovery. So the Fed has thought itself as the master manipulator of the economy, and what it means is that when it ends, it's going to end in a very big way. So it's the downside of this will be horrendous, but they're meanwhile keeping it going. Right. So as long as they can keep it going, you'll see what you see. Gold and silver are not going to move up until inflation moves up, or until there is a geopolitical event.
Right.
If we were to go to war with Iran, which is sort of being talked about these days, if Iran should mine the Straits of Hormuz, for example, which they've threatened to do, if we cut off their ability to sell their oil, well, oil, I've played this game with pros who trade oil, who do nothing but trade oil for a living. You were talking 150 to 250 a barrel.
Right.
Now, if you get 150 to 250 a barrel, gold is 2,500 along with it. So is silver. Silver go up. It's probably $75 an ounce.
Can I just push back slightly on that, though? Because I remember very well when oil hit about $150 a barrel. But gold didn't respond, really. I mean, I suppose gold did go up. I mean, it certainly went up since, 2000? It went up from 250 to 1,000, but...
Gold went from 250 to 1911.
Oh, that's true. It did hit, yeah, and then they brought her back down.
It had one of the greatest percentage moves in the history of any asset class.
And did that correlate with that run-up in oil?
Oh, yeah.
Okay. It all goes down the memory hole, Vic. The bankers manipulate gold and silver, and they're not able to manipulate Bitcoin. So we'll get to Bitcoin in a second, but I'll let you finish your thoughts here.
But it peaked in 211, and also gold was up in 212. It only was down beginning in 213, and basically that was a great deal of that was manipulation as well, but I'm not going to go there. I'm only saying that it did move up a tremendous amount, and it correlated aggressively with oil, and inflation moved up a little bit in those early days. It peaked in 2011, and that's when inflation peaked. Inflation has come really straight down. You look at any chart that measures commodities, the CRB or Goldman Sachs Commodity Index. You look at the Dow Jones Commodity Index. You look at any of them, they peaked in 2011.
Right. All right. Let me
along with gold.
Let me ask you this. So when you talk about the greatest recovery on record, when you say recovery, of course, I think of somebody who's healthy and fit, a runner, somebody who maybe had cancer, beat the cancer, now they're in the shape of their lives, a real recovery. The recovery you're describing is a heroin addict. This QE is heroin for the economy, and that's the recovery we're talking about, this Fed infusion of endless QE, this greatest monetary experiment in the history of the world, and you said it's going to end badly. Everyone I talk to who's an expert says this is going to end badly. Peter Schiff, so many others. Now, I know you're friends with Jim Rogers, and you guys once joked to each other. You ran into each other in a bathroom, and he said, "Are you still solvent?" And I think that's
all.
One well-heeled trader and a billionaire talking to each other. Are you still solvent? That's funny. And your rule number one is don't lose money. I just want people to understand why I keep coming back to Bitcoin. Gold and silver should be the canaries in the coal mine. I don't believe they're acting that way. Maybe Bitcoin is. And the case I want to make is that Bitcoin only has 17 million Bitcoins outstanding. The total that will ever be in existence is 21 million. So thereby, we're going to have a real market that's going to tell us a real story about how the world feels about the dollar. And I want to play this soundbite for you from CNBC. Are you familiar with Kevin O'Leary from Shark Tank?
Yeah.
I think you'll find this amusing. So Anthony Pompliano, the founder and partner of Morgan Creek Digital Assets, was on CNBC to make the case for Bitcoin and explain the Bitcoin surge in price. And Kevin O'Leary, I guess a guest on the show, at least in this episode here, was there to counteract that or play devil's advocate to the Bitcoin bull case. So I want you to listen to this. O'Leary says, make the case for Bitcoin after beating him up in this whole interview. And then Anthony Pompliano says what you're about to hear. And then I just want you to hear Kevin O'Leary's response, because to me, O'Leary is playing the part of the establishment, and he's also playing the part of that generational roadblock. His age group just does not accept cryptos and Bitcoin as anything other than junk. Here comes the soundbite.
So for your portfolio, here's the number one thing I can tell you as to why you should own Bitcoin. It's a non-correlated asymmetric return asset that the value drivers of all of your equities, everything else is tied to earnings, GDP, interest rates, et cetera.
The problem is that Bitcoin's not tied to anything.
Well, neither is U.S. dollars, and how big is your cash position?
You know, I look, I love your optimistic view of it. You haven't changed my mind at all. It's still garbage, and I'm not going to take real money and put it into this thing. It's never going to happen. I mean, imagine real money, taking real dollars that I'm making in cash 2.1% on and putting it into crypto crap.
Agree to disagree.
All right, I'll pause it there. He says taking real dollars and making 2.1% on it. First of all, you know that's not what he's doing with his capital if you watch Shark Tank. Your thoughts, though, on Bitcoin being a barometer for fiat currencies around the planet? Because if this is going to be a capped supply of 21 million and, say, 10 million well-heeled Chinese investors want Bitcoin, you can see how the price could really spiral out of control and head up to 100,000, like some are saying, quite quickly.
Mm-hmm. All right. Now, let me preface, I'm not an expert on Bitcoin. I am also not a believer fundamentally of what Bitcoin is, because the government can shut down the computers that house the Bitcoin. So in other words, they can cleanse it. It isn't as, I mean, if you buy gold and you put it in your safe or you put it someplace where you can get it, and nobody knows where it is, you've got real stuff that you can use for real money. But there are many holes in the theory of how you can effectuate using your Bitcoins. But aside from that, for the moment, that's not the issue. The issue is your question about buying Bitcoins. Let me give you a different answer. And Bitcoins are bullish for an odd reason that probably wouldn't be mentioned by many people, but I know this for a fact to be true. I'm going to preface it with what happened in December in China in the last quarter. Now, you understand, and nobody comments on this, you understand that China is a communist country. Everybody knows that. But what people don't relate to is that you don't own anything in China. Remember, communism by definition is the government owns the capital goods and the consumer goods. And consumer good in this case would be your cash. Now, where you put that cash, whether it be Bitcoin or otherwise, is temporary. It's not permanent. You don't have any rights to anything in China, even your children. So now they don't often use that, but let's say I know an expert in China, and basically Xi Jinping is a Maoist. The good guy in China was Confucius, the bad guy was Mao. And Mao, basically Xi is a Maoist, which means that if they ever need money for whatever reason, they will go to the citizens of China and say, give me your money, or the alternative is, or we'll take it and your life. So you understand that that it's a different system that we really don't wrap our heads around. So let me give you an example of what happened in China. You can only take $50,000 a year out of China. So the big game of the Chinese is how they can get their money that they're basically being, there's many $100 million people in China. There's 1.5 billion. And of the 1.5 billion, let's say there might be 50 million with over 100 million. Maybe there's more. I have no idea. But then what the normal way they do it is they go to Vancouver, they buy homes, they move here. My expert on China moved here from Beijing when she was very young, and basically still family in Beijing, and knows the game. So the key is in December, if you want to take note, Chinese retail sales fell about 5 to 10% by memory. Again, don't hold me to that number. But what went up 30% was precious gem purchases from Hong Kong. I'm getting to the answer on the Bitcoin in a minute, but I'm explaining to you the way they wanted to get their money out for whatever reason at that time. Basically, the economy was sinking, China included, and they paid a premium for precious gems. So they now buy precious gems from Hong Kong. Now they got the possession of those precious gems, but they hold them in Hong Kong. So now we come to the answer on your Bitcoin and why Bitcoin has gone from something like 4,000 to 8,000 in a very short period of time. The people that know in China, there's this Politburo, which is like our Congress, and they know what they're going to be doing with this trade. So what the reason for the big move in Bitcoin is that is one of the reasons, one of the ways that the Chinese get their money out of China without the $50,000 cap. They buy Bitcoin because it's in a computer somewhere and it's hidden. And they can buy as much as they want. The government doesn't know where it is. They can then get out of the country and access that money. So the big move in Bitcoin is because Chinese have been taking their money and putting it into Bitcoin to use to get out of the country. And the country has had issues, big issues. The stock market went up, as you know, over there, and a lot of it came from the selling of the stocks and putting it into Bitcoin to get the money out. You can't get your money out by buying stocks. So what is occurred, in my opinion, now that's fact. What I'm telling you there is fact. But what the speculation is that they knew they were really never going to do what the United States wanted them to do on trade. The insiders knew. And these insiders, the Politburo members and their family and their friends, they said, look, we're never going to do this. They stalled, and then they backed out of the deal because their hardliners said, no, we're never going to give you access to check what we're doing. So and this trade deal is never going to occur under the conditions of what we wanted it to occur at. That's basically a fact because Chinese are more than adversaries. They want to rule the world. They're communists. You can't forget that. You don't see articles attacking communists that often, but that's our big nemesis. So my view is that they see things turning into problems in China because this trade bill is going to drastically affect them, the non-trade bill, I should say. So they're taking a great deal of their profits out of the stock market and then putting it into Bitcoin so they can get their money out of China. That's the big reason. It doesn't take much to move it up, from 4,000 to 8,000 because there's not a lot of buyers.
No,
It's mainly the Chinese.
All right. Well, we're going to finish up here on Bitcoin in just one second. Just one last thing, though. And I just really want you to just open your mind, though. And you don't have to give me a yes or no, but just hear me out. First of all, Bitcoin's a global market. So lots of interested people throughout Asia, Japan, Hong Kong, all over the world. But the point is that if you imagine an asset, now Bitcoin's been around here for more than a decade, and young people seem to trust Bitcoin and cryptos more than they do the US dollar. There's a lot of changing attitudes across the world, especially as people wake up to the criminality of governments and the Fed, a privately owned entity of the US government that prints money on demand. Alan Greenspan, famous for saying, we guarantee we can pay whatever promises you want to make to your people. We just cannot guarantee the purchasing power of those dollars. As attitudes change and people wake up, isn't it interesting to see an asset, yes, speculative, but an asset that will be capped at 21 million with no possibility of ever creating more, just by virtue of that alone with 7 billion people on the planet? Don't you think that's interesting alone about Bitcoin and a reason to keep an eye on it?
Yes, but there are many other alternatives that are lookalikes to Bitcoin. There are many people creating digital currencies and other Bitcoins with all kinds of bells and whistles attached. One guy started one that was gold backed from the original inception. So in other words, yes, the original one are all the things you said, but there are many competitors that virtually offer similar aspects to Bitcoin. My premise is, I know people that own Bitcoin. So yes, I'm not limiting it to just what I told you. I am saying that is the impetus. If there is trouble or something is going to occur in China, those are the biggest buyers of Bitcoin. So if you think there's going to be trouble in China, they don't care what they pay. They just want out because that's how they get their money out. So yes, you can basically say that the impetus was this trade bill that, I'm looking at a chart right now on Bitcoin on the futures, and beginning April is when Bitcoin started to move from 3,800 all the way, now to 8,000. So, something happened in the early part of April to make it move. Gold hasn't moved like that, so it's not an inflationary play. It's how do I get my money somewhere where I can get it from any part of the world, and I can get out of China. That's basically the impetus that makes Bitcoin move, because they are the biggest buyers and they don't care what they pay. That's why I gave you that example on precious gems. They paid a premium of 30%. They're willing to lose 30% to get their money from China to Hong Kong.
Yes, and I agree with you. But the only thing I'm going to say is we push back on why is Bitcoin exploding in price now. If we look back at May 13th, market tumbles as China strikes back, may dump some treasuries. So this isn't just a case base for people in China trying to get their money out. We have to take a look at what's going to happen to us if the whole world turns its back on the petrodollar. And that leads me to the trade war, which is the last topic I wanted to talk to you about. But go ahead.
Once the game begins, once people have the momentum of buying it, of course, traders follow it too. I'm looking at a chart here. There was one minor down day where the close was below the opening, and that was on May the 6th. But from April 28th to date, there was 2 down days where the opening was higher than the close. This will be the third. So, there is an impetus here. The only thing, as I say, because I know people, who practice what I'm preaching, basically people are trying to get their money out of China because this trade war is not going to be resolved favorably to any side.
Right. Okay. And that's what I wanted to ask you about. As we conclude this interview, I want to ask you about Trump playing tough with China and these tariffs and the trade war. We continue to see China not back down, and I'm seeing a couple of many different opinions out there on this trade war. And I guess I don't need to cite, if anybody's listened to my recent interviews, who's thinking what about this. Trader Vic, what do you think about this trade war? Is Donald Trump playing with fire, or is he doing what is necessary and what we would have never seen Hillary Clinton do?
Well, I think he is got the cards because we buy 8 times what China buys from us. So he's looking at it that they're going to be harmed far more than us. We're strong. We've got much better numbers because, again, you don't know what their numbers are. I hear their numbers are 3%, 3% GDP, really, not 6. But neither here nor there. They basically are an economy that makes its living by selling things cheap. So if we raise the price, which is what a tariff is, it's a tax on those products. So what happens when you raise the price of something? People buy less of it, right? They don't necessarily keep buying it. That's the mistake. It's not necessarily a tax unless you pay it, but you have an option. People in America have an option. They don't have to buy those products. They can buy other products. Instead of buying a cheap cotton shirt from China, they can go to dinner in America. You see, there's all kinds of options. So it's not cut and dry that people are going to pay those taxes. They're not going to buy those goods. So what's going to happen? It's going to force the corporate America that opened factories in China to begin thinking about moving those factories to Vietnam. That's what's going to happen. The wage rates are cheaper in Vietnam than they are in China currently.
I was hoping you'd say they'd bring the factories home, but you're right. That's not what they're going to do. They'll just go to
no, they're not going to bring them home. Not while you can buy a person for $1 a day in Vietnam.
Yeah.
But the point I'm getting at is I'm talking now what Trump believes. I agree with him from this perspective. We have lost, we had roughly, it's a little less, but 20 million manufacturing jobs when we created NAFTA, when we did the deal on NAFTA. After we did the deal on NAFTA, you remember Ross Perot saying, listen to that giant sucking sound. Mm-hmm. Well, it's exactly true. So did Sir James Goldsmith. You may remember his name. They predicted to the nines, right to the T, what was going to happen. So we came down to a little bit over 10 million manufacturing jobs. Now I think we're up about to 12 to 13 million. But we've lost a lot of these high-paying jobs because of the deals that were made to offshore labor. That's basically what we did. America did. And America was becoming weaker for it. Although it's good for profits for corporate America, it's not good for middle-class people in America. It's just not. And eventually we become a poorer nation where corporate America doesn't care where it's located. Now, I'm only giving you facts here. So where he comes from is, I want to stop the decay of the American workers' wages in America. That's where he's coming from. I believe he's got the cards. He would have to suffer some pain. Whether he's willing to suffer the pain going into next year's election, whether it's a political liability is a different story. I believe he thinks that the Chinese will cave before he has to cave because he's got the chips. They buy very little from us. We buy a great deal from them. If we cut them off, they are in big trouble. And you can listen to Steve Bannon. He's given some interviews on this. He kind of knows the story of what Trump thinks better than I. But you've got Kyle Bass has recently recommended shorting Hong Kong dollars, buying U.S. dollars, because Hong Kong is in terrible reserve shape and it's going to fall. He's betting that Hong Kong is going to have to effectively devalue the Hong Kong dollar because it has very little reserves. So I'm only saying my view here is I'm trying to understand what Trump is doing. I know why he's doing it. Will he win? I think he's got a damn good chance of winning this war with China because he's going to force them to their knees because we buy 800 billion from them. They buy 100 billion from us. So we've got the leverage over him, and we're a much bigger country in terms of our GDP. At this stage, so we can suffer a little more than they can. So I'm only giving you the facts here. I believe he's got a decent shot of winning, but that's the behind the scenes of why he's doing it. I think he's on the right track.
All right. I super appreciate your comments on that. And, I'd be remiss if I let you go without asking you about the deep state. Your thoughts on Comey, Brennan, Mueller, the Mueller report, and Attorney General Barr actually now investigating the investigators. Do you hold out hope that we will see any indictments or arrests of the people really involved in collusion against our nation?
Yes, I do hold out hope. And I do think now the one thing you're seeing that is the worst thing you can see in proving that point is Christopher Wray, head of the FBI, who won't call it spying, and he's running the deep state. See, when you still have a major player in charge of covering up, that's the cynicism I run into, where I'm thinking, wait a minute, you got another Comey in there. I mean, he's just a different face. He's the same guy. So all I can say is that you basically, if you don't, and I can't think of the economist's name now, the classic economist who died about a year ago from Carnegie Mellon, and he basically said that if you don't, I'm quoting him now, and I can't think of his name. No nation who doesn't live by the rule of law remains rich, and no nation has ever become rich if it doesn't follow the rule of law. The rule of law here is really been just shot down in every way you can see it. Everybody knows that the FBI, CIA, State Department was corrupt, along with the Department of Justice. They were all corrupt.
Yeah.
They all try to take Trump down. Now, this is 10 times worse than Nixon, just a cover-up of
100%.
a burglary.
Yeah.
So, I mean, 10 times worse. But the point is it going to be solved? You posed the question. I'm hopeful, but I mean, like I say, keeping Wray in there, because he just tried to cover up what has been known as he tried to, let's say, use the FBI's ability to not allow the public to see documents that would prove that the FBI knew, 100% knew that the
Christopher Steele
dossier was phony.
And Christopher
and he
Steele
tried to cover that up about a week ago.
Yeah.
So that's going to be the case to see whether he basically, they get him out of there. I don't think he committed any crimes, except he's trying to cover it up. So you got to get him out of there. So I don't know to what extent this is going to happen. I only know that the country will go down the tubes if it doesn't address these issues. Because let me ask you something. If the FBI came knocking on your door and said, hey, let me just talk to you for a little, it's off the right, don't worry about it. Let's just sit down. We have a few common questions to ask. What would you do?
You'd be petrified.
Would you speak to him? I would say, listen, here's my name, and this is my lawyer's number. Call him.
Yeah.
And I wouldn't speak to him because they're setting you up. See, so all I'm saying is that the whole everywhere you look, you find corruption. So if you don't solve these problems, the country is headed in a downtrend that it can't recover from.
That's right. I mean, traitors it's dumb. No republic can weather traitors. And you're right. It's that the knock on the door we all fear. Hello, we're from the government. We're here to help. Hey, I Googled the name of that Carnegie Mellon professor just to give credit to the quote that you gave us. Was that Professor Alan Meltzer?
Yeah, that's exactly right.
Yeah.
I'm going to have to write that down. Yeah, Alan Meltzer was interviewed by Real Vision and Pippa Malmgren, and he stated that on one of his interviews. He was 88 or so, and he was like a Milton Friedman. I mean, a real brilliant guy. I have his books. He wrote The History of the Fed, and he was the one that quoted that about the rule of law.
Yeah.
Without the rule of law, you run into banana republics.
Yeah, it's game over. Well, look, I'm here to tell you that more than half this country, okay, look at Trump's rallies versus Hillary. She couldn't fill the corner of a gym. More than half this country wants to see the deep state actually drained, the swamp drained, and we want to see high-level arrests of high-level perpetrators, people like Comey, Brennan, Clapper, if he was involved, I believe he was, Hillary Clinton herself. I mean, the DNC, the officials at the DNC who paid $1 million for this Steele dossier. All right, my friend. Well, thank you so much. It's been an absolute pleasure. If you don't mind, and if you're willing, maybe we could revisit and see how things are shaking out in about 6 months. Let's keep our eye on Bitcoin too, because, you said there's lots of other adopters and, imposters out there. And the one thing I'd say about that is Amazon.com was first in the book space online, and look at them now. So Bitcoin was first. It's the biggest. Let's see how it goes, and we'll revisit all of this in 6 months. In the meantime, Trader Vic, can you tell people how they can follow you?
Well, I don't really do business with the public. I run algorithmic indexes, which I only license out to institutions, insurance companies, mutual funds. So I'm not really out there. I mean, you can go to my website, but I don't have anything to sell. And there's not much you can find out. But the bottom line is I'm more wholesale and manufacturing than I am retail at this point. So there's not really something I'm selling.
All right, fair enough. I thought, well, maybe we should get you on Twitter.
Well, I don't use any of those things either. I don't use any social mediums to converse with people. I don't have Facebook. I don't have Twitter. I don't use any of them. Right. But the point is, you can call me anytime.
All right. Well, I thank you for that, and I appreciate your time today. Guys, our guest has been Trader Vic, a legend in trading since 1968, and we'll definitely get him on again. Trader Vic, thanks so much for your time.
Thank you. Thank you, Sean.
Thank you. And guys, thank you so much for tuning in. For real news 24/7, visit us at sgtreport.com. God bless. Bye-bye.
There's no doubt that we're on a blacklist and we're getting banned by Google in terms of anybody finding our websites